Now behind me here you can see the UK Houses of Parliament. This is where the laws of the land are debated and made. Now it's over here that they're currently debating the future of the United Kingdom and therefore the future of the British pound. And take a look over here, the whole world is watching. Press from all over the world are here reporting because it matters. It matters to the state of the economy, it matters to the pound in our pocket. So we're now going to discuss exactly the implications of Brexit and the implications it will have on the currency markets. You know, driving up to London with all those white vans and cyclists is more risky than trading in the financial markets. Now, before I continue, let me remind you to subscribe to the channel if you don't already do so. Don't forget to hit that little bell notification. That way you'll be notified the moment my next video has been released. Don't forget to follow us on Instagram and of course on Facebook. If you follow us on Facebook, you can tune in live every Monday afternoon for my live event, 2 p.m. London time.
Well, at 20 minutes to 5, we can now say the decision taken in 1975 by this country to join the common market has been reversed by this referendum to leave the EU. The British people have spoken and the answer is we're out.
Now this is the moment that it all changed for the United Kingdom. It was the 23rd of June 2016, over 2.5 years ago. The referendum result that confirmed Britain was going to leave the European Union. It's since been aptly named Brexit. Now, the moment this was announced, the British pound went into free fall against all the major currencies in the world, especially the US dollar. And you can see here by looking at the pound dollar daily chart that at the time of the referendum result, pound was trading at 1.5 against the US dollar. And you see this big red candle basically showing you all the price action on the day. Pound was in free fall. Actually hit a low that day of 1.3225. Now that constitutes a fall of 13.5% in one single day. A massive drop for a major currency pair. Then the pound went into consolidation for a while before fear set in again and we hit that low back down there at 1.20. That basically equates to a 25% devaluation of pound post-Brexit. A huge move. Now since autumn of 2016 and again in December 2016, pound has been on a slight recovery to where we are now, trading around the 129 level. So it's all to play for. We are watching, we're waiting, we're seeing now what the Brexit decision will have and how this will impact the currency markets. Are we going to see a soft Brexit? We will discuss that in a moment, which could see the pound back up to 140, 150. Or are we going to see a hard no Brexit deal, which could see pound crash below 120 on its way back down to 121? So what are the likely or possible outcomes that can affect the next big move in sterling? Okay, firstly, let me bring you up to speed as to where we are. Now, the last couple of months or so, the British Prime Minister agreed with the European Union a draft agreement that would basically facilitate the UK's orderly exit from the European Union. Now, when this was announced a couple of months ago, the pound surged. It was brought up with the optimism that a deal had finally been made. However, this was voted on in the Houses of Parliament and it actually failed the vote in the Houses of Parliament. You'd think this is going to be bad news for the British pound, but no. After the initial move lower early on in the day when the numbers were looking pretty bad for the government, the pound surged on the no vote. So here we are basically at about that same level and we're poised for the next move. So what are the possible outcomes and how is this likely to affect the currency markets? Well, the way I see it is that there's three possible scenarios. Now, the first possible scenario I want to talk about is possibly the worst case scenario for the British pound. It's British leaving the European Union with no deal, no trade agreement at all. They revert to the WTO rules. WTO rules basically means that they crash out and they use the World Trade Organization rules, which basically affects the tariffs on goods and services. Now, undoubtedly, this is not going to be good news for sterling. Indeed, the Bank of England governor recently painted a particularly bad picture for sterling. Very gloomy picture indeed from Mark Carney. He mentioned that the UK economy could shrink as much as 8%. House prices could collapse 30%, and the pound could drop to 1-to-1, another 20% drop from where we are today. He said inflation could soar as our import prices here in the UK become very, very expensive. Indeed, it was a very gloomy picture, and indeed has been since accused of Project Fear. Perhaps so. But either way, I think it's fair to say it would not be good for sterling. I can see a certain challenge if this were to be the case back down to the 120 level against the US dollar. That's a drop of about 10% from these current levels. But I would expect the 120 level to hold, as politicians would be moving pretty quickly to try and get some form of trade agreement in place to ease the problems that are going to be there at the borders and supply chains and so forth. I think Mr. Carney might be overdoing it a bit, but I think 120 could certainly be a possibility. As I said, the fight is now on to avoid this scenario. Let's see if indeed that is the case and it's avoided. Now, the other potential outcome is that the UK Prime Minister could renegotiate with Europe and they get a revision to the draft agreement on the Irish backstop and so forth. I'm not going to go into too much about that now. But it's been pretty clear from the Europeans, time and time again, they're making this point that they're not going to rewrite the agreement. So I think personally it's not likely to happen. But a revision, if it were to be the case and were to get voted through Parliament, this would be the best case scenario for pound. Possibly it will surge up to 134 initially, which was a significant level on the way down. Then a break of this 134 level could see a meaningful push back up to the 140, the 143 level, and then potentially up to 150. The 140, the 143 level was basically where we were about this time last year, when there was much more positivity surrounding the whole Brexit debate. And lastly, the third possible outcome would be a delay in the Brexit deadline altogether. Now, there are a significant number of lawmakers, politicians calling for this. However, Europe have made it quite clear they're not going to delay just for the sake of it. They need to have a reason for the delay, like calling another referendum or a general election. Now, I believe if the UK were to impose a delay on the exit, sterling would rally. It would be almost like a relief rally that Brexit is not actually happening at the moment. You could possibly see sterling back up to the 134, the 135 level and hold there until there's more certainty in the actual Brexit itself. But still, 134 to 135 is a significant move from where we are today around the 129 level. My overall opinion, for what it's worth, is this: that the pound has had a significant sell-off since the referendum result in June 2016. The bad news is pretty much priced into the market. The pound basically feels like a coiled spring, just waiting for some good news to burst out higher. Only time, of course, will tell. But one thing I think is certain: we're in for some exciting times ahead. We discuss ongoing developments daily in our live streams and constantly looking for trading opportunities. So do pop over to forexsignals.com if you want to join the fun and hopefully make some money as well. So as always, if you like my video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to leave a comment. And of course, don't forget to subscribe to the channel if you don't already do so. Don't forget to follow us on Instagram and of course follow us on Facebook. And if you follow us on Facebook, you can tune in to my live stream every Monday afternoon, 2 p.m. London time. So let's hope they make the right decision over there. Either way, it's going to be fun trading the markets.